Hey everyone, it's Tyler. We're going to get started with the webinar in about 1 minute. So just hang tight and we'll be going real quick. All right, good evening. Welcome to the Economics of Trading webinar. I'm Tyler Ballhorn, founder of Stockscores.com. And tonight's webinar is going to take 45 minutes to an hour. It really is going to address these questions. I'm asked these all the time. How much can you make trading? How much capital does it take? How long does it take to learn how to trade? And how can I learn? So my goal tonight is to answer those questions and really go into a lot of the detail behind how you answer those questions. It's not so simple as to say you can make 21% in a year. It takes an understanding of a lot of concepts so that we can get to that answer. So that's what I'm going to try to do tonight. Now, as I go through this presentation, I'm going to show you lots of examples from real trades I have made and from trading data that I compile daily. I want everyone to recognize a couple things. Number one, history may not repeat itself. So what I'm showing you is what happened maybe today, maybe a week ago, maybe over the last 3 months. I don't go back too much farther than that. So it's fairly recent history. The other thing I want to emphasize is that the potential that I'm going to show you is very exciting. And I don't want you to get excited. And that sounds a little counterintuitive, but the thing about trading is that the best traders are those who don't care about the money. And if you really focus on, making a gazillion dollars, you're not going to make a gazillion dollars because you'll have the wrong focus. In order to be a good trader, you have to have a strategy that you believe in, that you have confidence in, and that you execute well. And so I'm going to show you tonight a little bit about my strategies and emphasize how I approach the market. But at the end of the day, you have to trade for the sake of the trade, not for the sake of the money. And so as we go through the presentation, you're going to see some of my performance figures and how some of these strategies work. That's great. That's answering your question. But as you walk away from the presentation, realize that you have to still learn how to do it. And if you don't take the time to learn, and then if you don't execute well, you're never going to achieve success. Now, our primary goals are very simple. Number one goal is preserve capital. So forget about making money. What we want to avoid is losing money. And in trading, there's always going to be risk. You will lose money in trading. I lose money every day, well, almost every day. Not that I lose overall, but I have losing trades on a regular basis. That's part of trading. But what's important is that I don't take big losses and I have big profits and all my winners. And so the winners pay for the losers. And that's how I preserve my capital. And so I really want everyone to make it their number one goal to preserve capital. You have to take the time to learn how to trade and have the discipline to follow the rules, follow the plan. If you can't do that, if you can't make money in my simulator, for example, or on paper trading, then you shouldn't start trading with real money. You should wait until you're successful in theory. All right, now I can get you there. I can teach you how to do that. But remember, number one goal, preserve capital. Number two goal, learn and have the discipline to follow the rules. And then once you're there, then we can focus on making money. But even then, we shouldn't focus on the money. We should focus on making good trades. And then the money will follow. Trust me on that. All right, so that's a little bit of the caveat as I go through this presentation. All right, so to begin, we need to understand a little bit of theory. First is the economics of trading. What are the key concepts? You have to understand some important concepts in order to be able to answer those economic questions. The first is the concept of reward for risk. Then we'll talk about risk tolerance. We'll talk about probability, how often you make money, how often you lose money, that sort of thing. And those things will then allow us to calculate the expected value of a strategy. I'm going to show you what an equity curve is tonight, and we'll talk a little bit about leverage and how you can use leverage to improve your performance in the market. But let's begin with this concept, which is reward for risk. How much you make for how much you risk. It's a much better metric than dollar profit or percentage gain. You'll often hear people say, oh, I made $2,400 in the market today, or I made a 31% gain in my portfolio this year. That's great, and that's not a bad way to do it, but it's better to talk about how much you make relative to how much you risk. If you risk $100,000 to make $10,000, that's a bad trade. If you risk $10,000 to make $100,000, that's a great trade. So how do we calculate reward for risk? Well, it's easiest if I just go through an example. Let's say we buy stock at $10 and we plan to lose, because we're always going to plan to lose. Every time we make a trade using my approach, we're always going to have a plan to lose. And so let's say we're buying that stock at 10 and we plan to lose if it falls to $9. And ultimately it goes up and we sell that stock at $15. Well, the risk of the trade is the difference between what we bought it for and our plan to lose price, which we call support or our stop loss point, whatever. And in this case, it's $1 a share. Our reward is the difference between what we bought the stock for and what we ultimately sold it for. In this case, that's $5. So our reward in this trade was $5 a share. And that gives us a reward for risk ratio of 5-to-1. And that's a good trade. Now, if we had lost money, let's say it had gone down to $9 and we got out and we took our small loss, our loss would be -1 RR, or R being reward for risk. All right, so that's the first concept we need to understand, because I'm going to show you some spreadsheets later where I have all my trades over a certain period highlighted, and it's always calculating reward for risk of the trade rather than percentage profit, let's say. So here is an example of a stock that I traded today. This is a real trade that I did. I bought it at the open on the first 2-minute candle. You'll see a little pink dot on there. That's my action candle indicator. If you've watched any of my other webinars in the last month, you know I talk a lot about action candles. So I bought that stock 2 minutes after the open and sold it at the end of the day. And in this case, the risk of the trade was the difference between this point and this point. And that was about a little over $3 a share. And the reward was the difference between this point and where I sold it, which was up here at the end of the day. And it ended up being 1, 2, 3, 4, 5 times risk, actually a little better on that particular trade. Now I actually traded this stock twice. I also bought some more, I think it was right here. And on that trade, the entry price was there, the stop loss point was there, and that one made just about 2 RR, I think. I don't remember the exact number, but it was about that much. All right, so that's risk reward in an example. Here is a lower price stock. This is one that I traded yesterday. Same strategy, actually. Notice that there's a pink dot there. So I bought it here and sold it at the end of the day. And in this case, my entry price was 407. The stop loss point was 387. Not really the stop loss point, but rather the support price. So the risk per share was 20 cents. And the exit was there at, I can't make out the exact price, probably about $4.95 or so. So let's call it $4.95 exit. And the entrance was, what did I say, $4.05? So 90 cents a share in profit for 20 cents a share in risk. Divide 20 cents into 90 cents and you get 4.2 or something like that. So that was the risk reward on that trade. Now those are both day trades, but we can apply that same concept to longer term trades. This is a position or maybe a swing trade. The hold period was just a little over a month. Entry price was right there at $1.99. And the exit was on a pullback stop at $2.44. And if we just take this as our risk, and then we count multiples of that for reward, this was a 1, 2, 3 RR trade on that one. And that took, 5 weeks or so. All right. Hopefully that's clear. Now let's talk about risk tolerance. How do we calculate our position size? Well, we use risk tolerance and the risk of the trade to do that. And to begin, we have to understand how much we're comfortable losing. How much are you willing to lose on any trade? And this is really, the answer is based on the amount of capital you have. Obviously, someone who has $1 million can take more risk than someone who has $10,000 to trade with. I think our age and where we are in life is important. Someone who is in their 20s has a lot of time. They can afford to take more risk compared to the retired person who is really dependent upon their savings for their livelihood and paying their bills as they're in the later stages of life. So age is an important consideration. Trading experience is also very important. If you've been trading for a month, I really discourage you from taking a lot of risk. It takes time to learn. And when you start out, trade with a low amount of risk. And as you get better, as you get skill, increase your risk tolerance. Because remember, our number one goal is capital preservation. And when you're learning, why risk a lot of money? I tell my students who maybe have millions of dollars to invest in the market to start trading with $0 worth of risk, and then start trading with a risk tolerance of $100. Now that means in the early stages of their process to becoming a trader, they're not going to be using much of their capital. But as they gain experience and expertise and develop their confidence, their skill, then they can start to increase their risk tolerance. And I think the most important criteria is comfort. What makes you sleep well at night? There are some people that have $1 million who aren't comfortable losing more than $500 worth of risk. Others who maybe have a lot of experience but less capital, maybe they have $100,000 of capital, they might be willing to risk $1,000 a trade or $200,000 a trade. And so it really comes down to what are you comfortable with? And that's really the most important thing. Now, I always encourage people when they start to risk $0. I've got a simulator that I make available to all of my students where you can practice trading for free and just go through the motions just like you would in real trading conditions of when to buy, when to sell, that sort of thing. Now, if you have a risk tolerance of $100 and the risk of the trade is $1, like our previous example, then that helps us to define our position size. In this case, it would be 100 shares. So if we're buying that stock at $10 and we're going to plan to lose at $9 and we're willing to lose $100 per share, then that means we're going to risk $1 per share, which means 100 shares will be our position. All right, so that's how we define our position size. And again, this is a concept that's going to make some sense when we start looking at some of my spreadsheets and equity curves and that kind of thing. Next concept that you have to understand is probability. How often do you expect to make money versus lose money? And you can define this by testing your strategy or compiling the results of trading over time. So every single day, I take every stock that I traded and also some stocks that I should have traded that I may have missed the trades for, and I put them into a spreadsheet. I'm going to show you that spreadsheet tonight. I've actually got a couple to show you. And in that spreadsheet, I have my performance data so that I can track the probability of success and the average profit and the average loss. And from that, I can calculate expected value. So if you do strategy testing, you may find that your strategy works 40% of the time. You may say 40% of the time, that doesn't sound very good, but you can make money being right 40% of the time. You can make money being right 20% of the time. And when we get into expected value next, it'll make a little more sense how that could be possible. So let's get into that, expected value. So from strategy testing, as we compile lots of data, we do 500 trades or 100 trades, whatever it is, we can start to see the averages over a large sample size. So let's say we do 100 trades, and on average, we make a $420 profit when we are right, and we lose $140 when we are wrong on average. That doesn't mean that we lose $140 every time. It means sometimes we may lose 50, sometimes we may lose 200, but on average, over a large sample size. We lose 140 when we're wrong, and we make 420 when we are right. Now let's add in probability. Let's say we're right 40% of the time. We make that average of $420, and 60% of the time, we lose $140. So we've got what some would say is a losing strategy because it's not right more than it is wrong. However, look at the expected value. We make $420 40% of the time, and we subtract from that $140 60% of the time to get an average profit per trade of $84. That means if we do this 100 times, we make $8,400 on a strategy that is only right 40% of the time. All right, that's expected value. Now from that, we can create an equity curve. We can take all of our trades, put them into a spreadsheet, and track the performance over time. So an equity curve shows how your strategy accumulates profit over time. It's based on that data collection you do either during your strategy testing period or from your actual trading. And it should go up from left to right. Ideally, you want to have an equity curve that doesn't have a lot of volatility in the curve. So what do I mean by that? Well, let's say you have an equity curve that kind of goes up like this, slow and steady, left to right. That's good. What we don't want is an equity curve that does this, because that will make our emotions go crazy and we probably won't trade it very well. Now, the final concept I'm going to talk about is leverage. So provided you practice good risk management, you can use leverage to improve your returns. The brokerage house will loan you some of the money to buy a stock. When you hold stock overnight, the leverage ratio is 2-to-1. So let's say you want to buy $10,000 of a stock. If you have a margin account with your broker, they will let you borrow half, or $5,000, and you put up the other $5,000. When you are day trading, the brokerage house, and not all brokers do this, but the brokers that are geared towards active traders do this, they will give you 3-to-1 leverage, as long as you don't hold those positions overnight, because there's risk when you hold stocks overnight. They'll give you 3-to-1. So on that $10,000 position, you only have to put up $3,300 of that position in order to take that trade. Now, I want to stress something very important. If you are not disciplined to limit the size of your losses, do not use leverage. All right, I can teach you how to be disciplined. I can teach you how to manage risk. But if you can't follow the rules, if you don't have the discipline to do what I teach you to do, then do not use leverage. Leverage is a double-edged sword. It can really increase your performance in the market, but it can also hurt you if you don't have discipline. And even if you have discipline, if you get unlucky and you have a stock make a big gap down, you can take a much bigger loss than you expected, which is one of the reasons why we don't ever put all of our capital into 1 or 2 trades. We want to have a number of positions open. Now, when you hold leverage overnight, when you have margin overnight, let's say you own a stock for 2 weeks, let's say, the brokerage is going to charge you some interest on that loan, if you will. It's not expensive, but it is a factor in your trading decisions. Now, what I want to do is jump over to one of my spreadsheets where I show some of the data that I collect. Now, this particular strategy spreadsheet here is for a day trading strategy that is currently my favorite. It's a brand new one. I just put it on the Stockscores website in the last few days. And it is a day trading strategy that generates some really nice profits, but requires the person doing it to be very fast. It is a intellectually simple strategy, but process-wise, it is fairly sophisticated. You have to work really quickly. The rules, there's only 2 rules to this strategy. It's very simple. But what I want to show you here is how, and this goes back to the start of October when I started testing this strategy, and I've been trading it with nice success over the last few weeks. But this spreadsheet shows every candidate for this strategy each day, because each day I create a list in the morning and I put it in the spreadsheet, and then at the end of the day I have the spreadsheet define the profit or loss for each position. And what you'll see here is the accumulated profit for this strategy over time for $1,000 risk tolerance. Now remember, when I say risk tolerance, that's not how much I'm putting into the stock. That's how much I'm risking as a loss on that trade. Okay, so I had a person ask me a question one time, how could you turn $1,000 into $170,000 in 1 month? That's not what's happening here. It's risking $1,000 per trade. Now, I could change this to $100. My spreadsheet is set up so that I can mess around with my risk tolerance. So if it's $100 of risk, well, look what happened to the profit overall. It went from $210,000 to $21,000. Why? Because I cut the risk by 10. So I just keep it at 1,000 just because it's easy to understand the risk tolerance amount. This is basically 182 RR, risk reward. All right, here is the risk reward for each of the trades that appeared. And you'll notice that some of them don't show a trade. That's because I have some other rules which eliminate those from actually being taken. Now there's a lot of data in this spreadsheet. The purpose that I wanted to show you tonight is the equity curve. So if I ever go to this tab over here, you can see how this equity curve has done since I started this at the start of October. And what's important is, number one, it's going up from left to right. And number two, it doesn't have a huge amount of volatility. It's pretty slow and steady left to right. This is a very profitable strategy, but I'm going to give you a little bit of the small print, I guess, is that I am a great trader and I cannot do exactly what the computer could do simply because I'm not fast enough. So take this number and at least divide it by 2, simply for the fact that we're going to miss some of these trades. I'm actually getting a lot better at it. I haven't missed too many in the last couple of days because my process is getting really strong, but I still miss some. And as a result, I don't earn what the computer would earn. Okay, because what I'm showing you in this spreadsheet is what I would earn if I was absolutely perfect and executed every trade perfectly. And that's just not realistic because we humans are slower than a computer could be. If I could automate this to be 100% computer doing it, it would get close to the numbers you see here, a little bit less because of slippage and commissions and that sort of thing. All right, so that's an introduction. We're going to come back to this concept of equity curves and testing and that sort of thing later. But this gives you an idea of what this particular strategy has done over 6 weeks. It has earned an RR, reward for risk, of 274. So if my risk is $100, it's made $27,000. If my risk is $200, it's made $54,000. Again, that's being perfect. Cut that in half to be realistic about what you could actually do with that particular strategy. All right. Now, what I'm going to now show you is that particular process or equity curve idea and testing with another one of my day trading strategies called the intraday pullback strategy. And it's one that I've done probably the longest. It generates probably 5 to 10 trades a day. In terms of the ideal trades, we don't take every trade signal that we get. I have a process built where it's almost entirely automated. And I have indicators that I've created that really help you find these quickly. These are the things that give us an edge in the market. And I run this every day in front of people. So each morning, people log into a webinar and I highlight these trades as they happen. Some of the highlighting is done by my computer because I've programmed it to talk and tell us when there is a trade signal, and do that simply because the computer is faster and more efficient than I am. When I used to do it without the computer, I would miss some of the trades. I now have the computer doing most of the work, and it is just way better. So here is the performance of the IPB strategy since August 1st. Okay, so that's what, 3.5 months? But what I want to highlight with this is I actually can do what-if analysis. So I have some indicators that I use with this strategy, and I can use different thresholds for that. Now, one of the indicators that's really important to this strategy is what's called the Stockscores Abnormal Volume Indicator. This is something I give to my students to use with a program like Tradestation. It's actually a factor in the market scan tool on Stockscores, but I can do some what-if analysis to calculate the average profit or loss from this strategy over time. So for example, I have an AV right now of set of 2.5. And since this strategy started in August, well, at least this data collection, I've been doing this strategy for years, but my data collection for this particular set of rules started in August, and it has found 521 trades, the average profit with slippage, because I always take something off for commissions and the fact that we don't get filled exactly where we want, is $391 per trade for $1,000 of risk on average. That's the profits and the losses summed up and averaged over time. Okay, so that's a total of $203,000 since the start of August. Now, if you look, and I haven't updated it yet for today, I'll do that tonight, but this is yesterday. It did 9 trades and it actually lost money yesterday. It lost 1.8 RR. All right, so if your risk was $100, yesterday it lost $180. That happens. This week has been kind of a crappy week, and that's largely because the market's in a pullback mode, nervousness, we're gapping down on the open. We see this sort of thing on a regular basis. It's part of trading. You have weeks when you make money really easily, and you have weeks when it doesn't work as great, and that's just the nature of trading. I don't want anyone to have any illusions that when you're a trader, you go to work every day and you make the same amount every day. You don't. I have days when I've made, in the last 6 months, I've made $35,000 in a day, and I've had days when I've lost a few $1,000s in the day. And that's the way trading is. I don't care if I make money on every trade. I don't try to do that. I don't even care if I make money every day or even every week. My goal is to make money over a large sample of trades. And this spreadsheet shows how that plays out. All right, so this has every trade that met the requirements of my rules since the start of August. And I compile this based on the watch list that I post in my live trading webinar every morning. And then in the evening, I go through and I have all the data entered, calculate the profit and loss for each trade. All right, so we can then look at the equity curve, and there it is. So you can see again, this one's going up from left to right. That's what's important. It had a couple strong days there. You can see some big jumps. Those were the big days. This was a day in August when, or was it August? No, it wasn't. This was August. This was, I don't remember now, but it was like a plus 30 RR day. And then we had another big day more recently too. So you don't know when those days are going to come. You go to work every day, you turn on your computer, you do your trades, and some days are big winning days. Most are relatively small win days or small loss days. But in general, you can see that the profits accumulate over time, and it's not totally linear, but it's fairly orderly. All right, so that is a little bit on some of my day trades where I've really collected a lot of specific data. I have also been making my public trade calls where I highlight stocks and say, this is a stock I think people should buy. So this is based on public calls, not my own trades. I wanted to do things where I've got evidence from people doing these and seeing these alerts that come out that this is for real, so that there's no questioning whether these results are real. So this is since the start of August when I started doing a strategy called Action Breaks, which is a new strategy. It'll be on the investor area of the Stockscores Education Center. Should be in the next week. Working really well. Since I started that in August, I've had 36 trades that have been closed. 16 are profitable. That seems really lousy, 44%. But look at the performance. Over a 3-month, it's actually 3.5 months, 16.33% gain. Over the same period, the S&P 500 has earned 3.84%. Now, the way that this has been successful with a relatively low success rate is because I don't take big losses and I take big profits. So here's some of the profits. EXO, 49%. That was the most recent one. Just happened a couple days ago. A 2-day hold for a 49% gain. Stock listed on the Toronto Stock Exchange in 29 days, up 22.6%. And then you can see the rest there. RLOG up 160% in 18 days. ATOS 111% in 2 days. Myriad Genetics up 58% in 120 days. So it's the big winners that pay the bills, and that's how you can be successful, because you have a high expected value from these things that overcomes a relatively low success rate. Now, I've been making some tweaks to the strategy that I think is going to improve the success rate, but I haven't done it yet, and the success rate is what it is today, but I do expect that that will improve in time. So now let's talk a little bit about the economics. How much capital do you need to do this? Well, as a general rule, you need between 100 and 300 times your risk tolerance, depending on the volatility of the stocks you focus on. If you focus on stocks under $10, then you need less capital. It's more like 100 times risk. So what do I mean by that? Let's say you're risking $100 a trade, multiply that by 100, then you need about $10,000 of capital to take most of the trades that are going to come along. You don't have to have that much, because if you have less, you're just going to not take every ideal trade that comes along. Now, we're going to use leverage to help us improve our performance. When I showed you this number, that is without leverage. If you leverage that 2 to 1, because our hold periods are quite short, you could probably grow this from 16 to maybe 30% in that 3.5 month period. It's not exactly double, because you're going to pay some margin interest when you take out a margin loan basically to own those stocks. So 2 to 1, you would think, well, shouldn't you make 32%? Yeah, in theory, but you got to pay some margin interest. That's why I've got it at around 30%. All right. So what are our profit potential goals? When I'm day trading, I'm trying to earn between 10 and 30 RR a week. Your typical week is closer to 10. But then every once in a while you have a big day trade that comes along that makes you a big profit. So, there have been day trades in the last couple of weeks that have earned over 20 RR in one trade. They don't come along that often. And so you might have a week where you don't get any of those. Those are the weeks when you're happy to make 10 RR. Then when you have a week when you may have one of those 20 gainers, well, that's how you can get to 30. And they do come along. As I said, in the last few weeks, there's been a few. Swing trading. Again, try to get 10 to 30 RR a month. Instead of a week, it's a month. And position trading, try to get that per year. If you can do that, you can beat the market. And obviously, when you're position trading, you're not going to be doing a lot of trades. You maybe do 10 trades a year, maybe 15. When you're swing trading, maybe you're going to do 10 trades a month. These take less time than day trading. Day trading takes way more time. You got to sit there all day or most of the day. But it means that you can earn more because you're working more and you're turning your capital over more often. Day trading intellectually is no more challenging than position trading, but you have to think quicker. It's faster paced. I love day trading, and that's one of the reasons I love day trading, is because it's fast paced and you get that quick gratification. It's a lot of fun when you're doing it well. When you're trading, I really recommend that you start with $0 of risk and practice using my simulator or just on paper. Take time to learn, and ultimately our goal is to beat the market. So when we look at this, we say, okay, a 16% gain when the market earned 3%, we beat the market 4 times over with that particular strategy. All right, so let's go back to some of these examples that I showed earlier. So in this particular case, let's use $100 of risk. The difference here between 94.76 and 91.68 is roughly $3. So if we wanted to take $100 of risk, we would buy 30 shares. 30 shares of a $94 stock, I'm just going to round off, that's $3,000. You can leverage that 3 to 1. So instead of it costing you $3,000, you have to put up $1,000 of capital. At the end of the day, that trade had made 5 times your risk. So you risked $100, multiply that by 5, made $500 of profit on a trade that required $1,000 of equity or $3,000 of capital. That's pretty amazing, right? On a percentage return, that particular trade earned you 50% on the capital that you had to put up to do it. On this one, $4.07 is our entry, $3.87 is our exit. That's 20 cents a share in risk. If we want to take $100 of risk, we're going to buy 500 shares. 500 shares times 20 cents is equal to $100 of risk. 500 shares is going to cost us about $2,100. It's a little more than that. No, sorry, 2,000, a little less than that, 2,035. But again, you can leverage that. Now, some brokers won't let you leverage stocks under $5. So let's say you can't leverage it. At the end of the day, that one earned about a little better than 4 RR or $400. So you earned a $400 return on a $2,100 trade. But if you could use leverage, and again, not all brokers will let you leverage stocks under $5, but if you're with one that does, then it only took $700 of capital because it's a day trade and you can leverage day trades 3 to 1, and that led to your $400 profit. All right, on this one more time, entry price at $2, stop loss 15 cents lower, $100 of risk, earned you $300 of profit. Your position size is about, just doing the math in my head quickly, 15 cents a share in risk, $100 of risk. So let's call it 700 shares. 700 shares is $1,400 entered into the trade for a $300 profit. So how long does it take to learn this? Well, I taught myself how to trade. It took me 8 years before I made significant money in the market. There really wasn't anyone around teaching people how to trade when I started. I had to teach myself. And remember, I started doing this 27, 28 years ago. The other way to learn is to have someone teach you. That's something that I do. I teach about 100 people a year. The Stockscores Trader Training has about 15 to 20 hours of study required to get through it. So I've had students do it in a weekend, but I think most people take a little longer than that. There's theory, which is how to read a chart, how to manage risk, some of the things we've talked about tonight. And then there's the rules of the strategies. You're not going to do every strategy. I recommend people do 1 or 2 when they start. And then there's practice. I have a mentorship program where we meet on a weekly basis for about an hour online, and I teach for that hour and then give some homework. We do that for 4 months, 16 weeks of training, and at the end of that 16 weeks, you should understand everything. And that's only doing an hour a week. So like I said, some people can do that in a weekend. I think it's a little overwhelming to do it in a weekend, but I've had people do it. Others, you can just do it 1 hour a week, and in 4 months, you can learn what you need to know in order to do what I do. So we've built a online system for this. It is called the Stockscores Education Center, and it's broken up into a few different areas. So let's jump into the website here and go to Trader Training, Education Center. I've logged in. I have full access. You only have full access if you are a member of the Stockscores, and there's different levels of membership. So if you are a foundation member, you get access to these lessons. This is the theory. So there is a written component. This is the 6 elements of chart patterns, the things you need to understand to be able to apply my strategies and analyze the chart. Then there's a video. So you click on this little video icon. You can do this from your iPhone, from Android phone, iPad, computer, whatever. Just click on play, and here's some nice tunes, and away it goes. We'll stop that because that's, there we go. And then once you've understood the theory, and that's where the bulk of the work comes in because there's quite a few lessons in that area, then you're ready to start learning the strategies. We have investor strategies, and I have a new one coming called Action Breaks. I also have some strategies for exchange traded funds that should be up in the next 1 to 2 weeks. So I'm hoping 1 week. And then we have active trader strategies. I just uploaded a new one a couple days ago. That was the worm. I also uploaded a bunch of changes to the intraday pullbacks. The nice thing about having this online, instead of in a book that I mail you, is that I can make changes, I can make improvements, and just make it instant so that any of my students can then see the latest and greatest as I change those things. And so again, with these strategies, there's a written lesson and a video, and that's all in the Stockscores Education Center, which if you are a member of Stockscores, you log in from any device and you can read those things, watch the videos. There's tests, there's assignments, at least on the theory side. All right. So what are the costs? Investor course, $2,495, that's Canadian dollars. It is focused on my position trading strategies. It gives you access to the Stockscores Market Scan tool for finding opportunities. Now, I haven't shown you that tool in this webinar. There are other webinars that I've done. I'm going to show you where to find those so you can learn more about the investor course, the active trader course, that sort of thing. The active trader course is $34.95 Canadian. It's focused on my day and swing trading strategies, so more active. It gives you my proprietary indicators for Tradestation. Again, I haven't really shown you a lot of that today, but those were the pink dots on my chart. If you want more information on that, I'm going to show you a place where you can get some of those videos that you can watch. It also makes you eligible for something called Active Live. If you want to watch my trading screen, let me do all the work for you, let my computer give you the alerts in real time, then you can subscribe to Active Live. You can only subscribe to Active Live if you are an Active Trader member. So I don't want a lot of people doing it, so you have to be an Active Trader member. And if you take the Active Trader course, it includes the investor course. So you don't have to buy both. You want to do investing for your longer term portfolio and actively trade as well. Take the Active Trader course. It gives you access to everything. Now, Active Live is something that you can subscribe to for $195 a month. And that basically is paying me to do all the work, and you watch the webinar and get the trade alerts in real time. It saves you the cost of subscribing to Tradestation. It saves you a lot of the work. It sort of leverages my expertise. It's real-time trade alerts via webinar, live every day, all automated. I've spent a lot of money developing computer systems to do this. And it's ultimately, I'm doing the work to find the trades so you can focus on making them. It's only available to Stockscores Active Trader members. All right, let's and then finally we have the mentorship course option. This is the Active Trader course with 16 weekly hour-long live classes by webinar that I was talking about earlier. You go through the material step by step with me. Each week we meet you typically on a Tuesday night, 6 p.m. Pacific time. And every class is recorded so that you can go back and watch the videos later. I answer your questions and we just go through the material step by step. Our first meeting for the mentorship will be December 1st, or 5th, which is a Tuesday. And then we'll resume after the holidays mid-January. This course is only open to 15 people. So if you would like to register for that, you need to email me. I'll put my email address up on screen shortly. And the mentorship includes the active and investor courses. So it's pretty focused on the Active Trader course, but we cover some of the investor stuff as well, and really dedicated to learning it step by step. Now, the last thing I want to talk about is the live training that we're doing, which starts this Saturday. Live online training in November with the foundation review, Saturday, November 18th from 9 a.m. Pacific until 12 p.m. Pacific. And then we're going to do investor strategy practice sessions, Monday, November 27th till Friday, December 1st. Each evening, I'm going to do a 1 hour webinar where we just practice doing market scans. In the first couple sessions, I'm going to do sort of the work, and then the last few, I'm going to make you kind of pick the winners, and I'll tell you how you did, and we'll highlight which ones everyone thought was good, and I'll give you some feedback on those picks. And then finally, the Active Trader Live. Anyone who takes the Active Trader course will get Active Trader Live for free for 1 month. It's $195 a month to subscribe to that, but everyone that does the Active Trader course will get 1 month that they can use anytime in the next 6 months. And again, that's watching me trade. So if you purchase the course before Thursday, November 16th at 11 p.m., so it's coming up fast, you get those sessions for free. The investor sessions for the investor course, the Active Trader session for those who do the Active Trader course. The Active Trader people also get the investor sessions as well. Now, what I want to do is put up the poll, and then if you have any questions, you can type those into the question box now. But I'm going to put up the poll right here, and then we'll take your questions. All right, so to learn more about the Stockscores approach, go to the Trader Training area of Stockscores.com. The address is stockscores.com/learn. You can also just go to the Stockscores website, click on the Trader Training menu, and go down to the Trader Training area. I've also got a YouTube channel where you can see many of the past webinars and videos that I've done. So if you want to learn more about the different courses, about my strategies, there's all kinds of videos on my Stockscores YouTube channel. So just go to go to youtube.com and then search for Stockscores. If you want to see some of my past trades, some tips on trading techniques, where I went for summer vacation, those are the things I have on Twitter. Just search for @Stockscores on Twitter and you can see that Twitter feed. And hopefully you'll follow me on Twitter because I like to have people following me. If you want to register for the course, go to www.stockscores.com/learn. The deadline for the November 16th the November 18th live training. Don't read what it says there. So the Saturday training coming up this Saturday is November 16th. So if you register for the course before 11 p.m. on November 16th, which is Thursday night, then you get that live training for free, starting with Saturday's foundational review, and then we're going to do market scanning from November 27th to December 1st. And the active trader students also get a free month of active live. There's my contact information, tylerb@stockscores.com, Twitter @stockscores, and of course the YouTube channel, youtube.com/stockscores.com, or just search for Stockscores when you get there. I want to thank you all for joining me. If you need more information about the courses, you weren't able to answer the poll, then just email me, tylerb@stockscores.com, and I will fire you the details. Have a great week in the market. Trade well.